Today, Tony's latest stock tips. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. And I'm joined again by Tony Lecantro from Alto Capital. Hello, Tony.
G'day, Martin. Always good to do these interviews close together because what I've taught viewers, hopefully, is how not to lose money. Now, the purpose of these interviews is how to make money in a market where the typical property and bank interest ain't going to do jack.
Yeah, no, I think it's really, really important because, I have a few people say to me, oh, you're always, on the negative side and you're always, highlighting the issues. But, what we also try and do is to provide some perspectives in terms of things that people might want to think about. And that's why I really value these conversations because as a, financial advisor, investment manager, you've got some really good ideas there and also a finger on the pulse. So really good to just explore some of those now.
Yeah, and one of the most enjoyable things about doing these interviews is the comments section. I seem to attract about 2% of the peanut gallery, as I like to call it. So, you know what? I've been doing this 21 years, right? I don't care what anyone thinks of me. I've floated companies for $4 million that have paid $500 million in tax. It creates jobs. I understand the mechanics of speculative bubbles. I've got the largest sample size of speculators in the country because I dealt with them in the dot-com bubble. If people don't listen to me, if people disagree with me, I don't give a shit because I'm giving people, small companies, with a chance of becoming bigger ones, and that's where you're going to make the money, not building units out of Western Sydney and trying to flip them. So take it or leave it, people. I don't hold back. Obviously, there's a disclaimer. Let's go. Let's run through them. Now, my tips that I gave before the end of last year, I've got a bit of an update on them. First one's Minotaur Exploration, trading at 4.2 cents. They just signed a deal with Sandfire combined with Oz Minerals. So they have potentially a large discovery in Queensland and remain undervalued. The market doesn't like it because the chart looks bad. They don't trade much, but they're a great story. I think they're probably worth 10 to 12 cents or a triple. The second stock, Red Metal, are out in the Nullarbor drilling holes for a mine in a new frontier area. Both holes haven't found a mine. The stock's trading at 8.6 cents. They do have one of the largest undeveloped silver resources in Australia. They have great management, and Oz Minerals are going to hand them a few $1 million this year to drill for a deposit. So it doesn't matter if you buy the stock at 11 cents, it drops to 8. If they hit it, the thing's going to 50 plus. So low downside, moderate to high upside. The company which I floated in December 2018, Exafarm, has come out with some brilliant announcements. They're trading at 30 cents. I should disclose that I'm the fourth largest shareholder in this company. Now, today they announced that exosomes might have an effect on bladder control. That's amazing because I read that 37% of women have bladder issues as well. And I think that's going to be more prevalent once the economy turns to shit. But anyway, they also had some success with erectile dysfunction as well. Now, people must think that's something that we laugh about, even was laughed about on maths when poor Mikey, they said he could only go for 10 seconds. But that's actually quite a huge social problem. And in their announcement, they've said that exosomes could replace stem cells and become a new class of medicine. So I'm really happy with that one. I put on client drinks, a few clients in Melbourne with the managing director, and that really went well. Narada, which I floated recently, I am about the 17th largest shareholder. I wasn't on the top 20 list, Martin, so I went on market and I've spent about $50,000 of my own money buying stock at a high price at where it's trading today. They are looking at cholesterol There's a cholesterol inhibitor that works in the US, but you've got to pay $7,000 a year and you've got to inject it. So they're looking at a daily pill to address LDL cholesterol. They also have a traumatic brain injury drug they're trying to develop, which is useful for a lot of sports people that have concussion and go on to have neurological issues. So they're trading at about 20.5 to 21 cents, and that's one of my strongest buys at the moment. Proteomics is a kidney test company that can predict the onset of kidney disease years before it happens, and they have a tie-up with Janssen, who are part of Johnson & Johnson. So they're trading around 33 to 34 cents. They've kicked up from 28 because a newsletter wrote them up. So, and they also test the proteins of A2 milk. They have a laboratory. To me, this is a potential mid-cap biotech stock. And I got bagged because the chart looked terrible, but they've recovered nicely. Eagle Mountain Mining is a stock based in Arizona, looking at copper and gold, run by Charlie Bass, who made a fortune during the coal bubble and the previous gold bubble. That's another good company. Dimerix is another kidney drug, which has actually done really well for us. They're trading around 15 and a half. So look, that's what's happening with the stocks. I've found a little gold company with fantastic management that have come from Gold Road. Gold Road were trading at about 4 cents. They found one of the biggest deposits in WA. They're trading around $1.60 now. So they're geologists, and one of their corporate guys have defected to a little company called Hammer Metals, which are trading at about 2.3 cents. I just chucked $22,000 of my own money at 2.2 cents. The managing director was formerly the business development officer for Sandfire. Now, if that's not an endorsement, I don't know what is. And at some point, JOGMEC, the Japanese oil and gas company, are committing $6 million to exploration in Queensland, which is half the company's valuation. So that's what my career's riding on. Pretty much Exafarm, Narada, but these are companies that have important products that are unmet clinical needs. So I think that viewers wouldn't have heard of these companies. They don't understand how they trade. You look at a chart and say, well, I'm not buying that. Lecantro's wrong. But speculation is all about buying for a change in behaviour. And that's where you make your money. I floated Independence Group at 20 cents. They went over $10. Other gold companies, I just sold my last client out at Northern Star at $13.77. He paid 5 cents for them. Where else can you get 280 times your money? Admittedly, the client at the best of times comatose. So we actually, but you've got to learn. And when I had coffee with one of your viewers, she said, well, I'm 61. I don't have time to learn. So people need to let go. And I'm not one of those dodgy financial people on a current affair that takes someone's life savings. Like someone with $500,000 to $1 million, let's start off with $30,000. Let go. That's money, risk money, because you're not going to make money in a bank, and you're not going to make money on Sydney and Melbourne property. You might fluke a regional area. So I've pointed out where you're going to lose money, and I've pointed out some stocks where you could possibly make lotto style returns, and I've had them over 21 years, and that is not going to stop, because what I've done is become a better researcher. I can actually read people quite well. And during bubbles, I'd see someone's phone number pop up and I knew the question. So it's all about experience. And I think my experience with speculators flows through to property, because property is trading like a shitty speculative stock. So take it or leave it. Take it or leave it. Put negative comments. I don't give a shit. Let's have a look in 1 to 2 years. If one of these comes up with a drug breakthrough, you're going to make a lot of money, and there's going to be lots of ups and downs along the way. I mean, owning a share is a journey with management, not paying $10 a trade through Comset and changing your mind 20 times a day. And once you start to feel anxious about trading, I think you're failure rate is pretty much 97%. So anyway, that's my view, Martin, and that's what I'm riding on. I've put a lot of my own money in these companies around these prices or slightly higher. So I'm putting my money where my mouth is.
Okay, well, that's great, Tony. And, I think it's worth saying a couple of things. Firstly, we'll put a very important disclaimer that this isn't financial advice. It's very important that people get advice one way or the other. I guess, secondly, Tony, that, you are there as a potential investment manager and advisor. And I know that some of my followers have actually reached for you and been very happy with some of the conversations that you've had with them. And thirdly, but I should say DFA has no financial interest at all with you. This is not being done to spruik anything. It's just really what we're trying to do is, as well as highlight some of the issues with the property and the broader economy, also perhaps show people that there are also some things that are worth thinking about on the more positive side. And I always finish these chats thinking, well, things aren't quite so bad as I thought they were.
I think, I actually was just reading Twitter before, and I read Stephen Kukula's Bag Gold. I don't tell a Rolex Tag Heuer trader how to trade watches. And I think it's a bit hypocritical when he closed a mining conference. I mean, there's no love lost between us, Martin. But seriously, gold's been a currency for over 5,000 years. And if you bought 700 ounces of gold in 1971, you could buy a house in Sydney. If you had 700 ounces of gold now at about 2,400 Australian, give or take, that gets you $1.5 million. Will get you a 2-bedroom unit in Campsie. So at least you've got a roof over your head. So gold maintains its purchasing power, and investing should be fun. And if we get away with owning an Irish-style collapse, I think there's going to be a bubble in low-quality ASX stocks. So watch out, because it's going to be like a casino on steroids, where those trading have no idea what they're doing. And I know there's a lot of distrust of professionals. Again, I've got enough work to last me a year. If people decide to come on board, I don't care, to be honest. And that's it, Martin. But I really appreciate this opportunity.
Good to talk to you once again, Tony. And we'll check in again down the track and see how those stocks track. Thank you very much for your time today.
Yep, absolute pleasure, and look forward to our next interview.
Cheers.